Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Wednesday to you. Happy Hump Day. Hope you have an amazing day and a wonderful week. After that holiday weekend, we're going to take a look at Bitcoin here, see what's going on. We got a double bottom printing, just following a rising wedge pattern. I'll explain kind of what that means for us here. Keep this in mind. It is an hourly chart, and it's not the most reliable because a smaller time frame, effectively, patterns are less consistent, but it is still something to recognize. We want to talk about what that means in the overall big picture. Same thing with high block capital, some back-end data here we want to look at with open interest positions. Quite interesting there, no pun intended, as well as, of course, the liquidation heat map, some key levels for liquidations that we really need to recognize and kind of pay attention to, because it is a stark reality. We could see the price action continue lower. In fact, even though we are printing a double bottom, it does look like Bitcoin wants to continue lower. Okay, so just keep that in mind. Keep your bags ready. I think there's a good chance we might see some lower price action. Either way, let's go ahead and take a look at a few things. Just before we do, I want to congratulate some of our community members here over on our Discord for some nice profit there for our bell trade. 61% in 8 days. It's not too shabby. And if you're not part of our Discord community, come on, jump on over here. It's really a lot of fun. We have a good time and just get to know each other better, and obviously working with other traders is fantastic. So keep up with the good work there for all my current traders. And obviously, if you want to kind of become a little bit more familiar with the ins and outs of everything that I have to offer, check out our Telegram and/or Discord/Twitter. All linked down below, of course, so you can essentially kind of stay in the know with technical and fundamental data. So when it comes to Bitcoin here, let's go ahead and look at the smaller time frames later. We'll start with the larger time frames first and kind of see what's going on here. So as per usual, the more often you test lower levels or higher levels, just you keep testing the same area multiple times, it's going to break eventually. Okay, so we've tested this lower level 1, 2, 3, 4, 5, now 6 times roughly in the last 2 weeks of trading. Okay, so that 25,600 mark is getting pretty battered and more torn, right? It keeps getting hit hard and consistently getting just retested, right? And the more you retest something, the more likely it is to break. So if we look at this current levels here, we can see the probability of the price going lower is higher, okay? Just based on that sentiment. Now keep in mind there is a bit of a wedge pattern here. If you exclude this outlier here, there's a few other things that you want to factor in, but for lack of better terms, we're looking bearish, right? On the daily. Taking a look at the RSI, we're getting closer once again to 30. Crazy, we were down below 30 for so long, and now we're still closer to that 30 level, right? So just truly bearish sentiment in the overall sense of things here. I still feel like we could see a leg up here to retest at 20 to 29,000 range, but between now and then a lot has to happen. What we need to do before that happens is break above the 20-day SMA. Now I talk about this a lot. The 20-day moving average is an important indicator, letting you know the overall trend. Okay, it usually moves concurrent with trend lines. So anytime it's below the price action, you can generally assume it's going to be bearish. When it's above, it's going to be bullish, right? So kind of generally the concept there. Now, it's not a distinct line in the sand. It's not like it's like 100% likely, right? But it does increase the odds of knowing which side of the tracks you're on. And right now, knowing here that with us being below this level, we are essentially on a bearish side of things, right? So being above the 20, I think, is important. It would be a good starting point for us to consider the next leg up, obviously. Bitcoin can get a wild hair up its ass like it does normally, and it just shoots up out of nowhere. But generally speaking, we need to see the price close above 26,000 at the very least in order for us to have a leg to stand on. Okay, so this could be the bottom, but it could also be the start of the beginning of it could be the beginning of the top once the price goes down lower. And we'll look at liquidation levels next. In fact, why don't we just do that right now? Because I think it's important to recognize. Let's go ahead and double check a few things first. So we can see the total amount of liquidations is fairly low. Market's kind of just going sideways, for lack of better terms, nothing too crazy. Albeit more longs are getting liquidated than shorts right now. Still nothing out of the ordinary. We can see whales are always very active. They are typically more active the lower the price action goes. We can see that now. And we can also see here too that the cumulative amount of net longs, this is an aggregated amount, is slowly increasing. So people are trying to get a little more confident here at this level, but it's not super significant. We can see shorts are kind of just going sideways for the most part too. So in essence, these two things kind of wash themselves out. When you're range bound stuck in this kind of stupid environment, you'll notice that there is not a lot of interest in taking long or short positions. A lot of times the whales are just kind of manipulating their way through it. So again, I wouldn't touch Bitcoin with a 10-foot pole right now, but that's just me personally. I have some buy orders for some lower price points, which we'll talk about, and just kind of help you understand what that might look like. But for right now, we got to assume the price can continue lower. We also are fairly high on the fear index there, while it's still slowly increasing and getting a little less feary, if that is such a word. You can tell that we're still looking pretty bearish, right? So people are concerned with taking long positions right now, and they feel the price is going to drop with good reason. Okay, so taking a look at open interest, let's double check and see where all the longs and or shorts are hedged right now. You can see some late longs here at 25.6, even though the price continues to go lower, and some other longs getting fairly well liquidated. So again, longs are not having the best time ever, but some folks recently bought the dip, and we can see previously majority of the short positions here in the recent 12 hours are hedged right there at 25.7. So shorts are in profit, longs are not. That's kind of the par for the course right now, huh? All right, so quickly note here that what this takes 3 different exchanges, gives us an aggregated result of how many liquidation levels there are. In other words, in the last 3 months, this is going to tell us here roughly the most amount of liquidation levels. Okay, and the highest concentration of liquidation is 24,200. Coincidentally, that's exactly where the price action wicked down when we had that terrible day on August 17th, right? So what does that mean for us? Well, if we retest that level, it means we'll have further liquidations and the price should shoot down lower, close to that 20,000 mark. And if you don't recall, there is a CME gap at 20,000 we need to be aware of. Okay, so again, I'm just painting a worst case scenario here. This is not by any stretch exactly going to happen, but it could, right? So look at that, 20,200 upwards of 21,200. The largest CME gap we have that is still unfilled. Okay, so heaven forbid the price action were to wick down to that 24,000 mark again, we could very well see the price action shoot even lower to continue to hit that. Because once again, if this most recent liquidation occurred, when we saw the price drop from 28 to 24,000, it gapped pretty hard right here in this range between 27,000 and 27,500, which has already been filled. What I'm getting at though is it moves so quickly that it shot down a lot faster because most of the liquidation levels were at that 28,000, 27,000 mark, and it kept going because of what happens when you get that massive squeeze of longs getting liquidated. So again, just some friendly advice. Price action comes down to that level. I would have some limit orders, some fairly aggressive limit orders set at 20,500, 21,000, 21,500, 22,000, just kind of every 500 roughly. So if the price wicks down that crazy, you can get filled and average your position down nicely. Just some kind of friendly recommendation. I'm not telling you the sky's going to fall or we're going to drop like a rock, but it certainly looks like it wants to. Okay, so we'll talk about that. All right, so we talked about the daily here. One last thing just to quickly note, let's double check our volume profile. Again, we do have some decent amount of support here at about the 23,000 mark. Majority of volume is hedged at that 23,000 minus the 16. So let's just go ahead and focus on that. So, prior to January 1st, essentially, or sorry, post January 1st, the most amount of volume we have this year is at 23,000. So that'd be a solid place to go ahead and consider adding to your position. Probably the heaviest is right there at that range because it's going to take a lot of volume to go below that. But once again, a lot of liquidation levels are hedged right there. That makes sense, right? So again, it's kind of what we're looking at. All right, so last thing we want to talk about, we'll wrap this up here, is just the 4 hour and the 1 hour. We can note that we are still below all 3 moving averages here on the 4 hour too. If you look at the RSI, still under 50, that's typically very bearish. MACD is starting to diverge, which is not very strong considering going sideways. I wouldn't put a lot of weight into that. But the bottom line here is that we are in a position where we're seeing a lot of price action coming down. Okay, so it's nothing super crazy. So let's talk a little bit about this double bottom and kind of see where we're going. So a lot of times when you see a double bottom, it'll inevitably recover and retest this level here, at least its most recent high. Okay, so again, if the price does wick up, we can expect a rejection at 25,900. That may be a good consideration for a short if the price were to pull back up. But it also might squeeze out some longs or some shorts, right? Because we looked at the liquidation levels for shorts. They're right there at about 25.7, 25.8. So the price comes back up to that level, we could very well see it continue lower. Otherwise, if it breaks through that level, we could see the price surge and continue higher. So again, a closure above 26,000 I think would be pretty solid. That would give us a good foundation of wrecking some shorts and hedging those shorts with some longs, and we'd be in a much better position. So what does that mean for us here? Well, it really just tells us that in the overall sense that these patterns don't matter as much as they would if they're on a larger time frame. So again, even though yes, on the hourly it's still relevant, this range bound activity is fairly unreliable. So let's talk about just really quick the Ichimoku cloud and call it a day here. So once again, we're starting to get range bound, so it doesn't matter as much. But the truth is here that we're below pretty much all three indications here for the cloud, letting us know that a long position is not really the most appropriate right now. It is also telling us that a short isn't ideal either, because lagging span's kind of intersecting with the price action. We got not a definitive break to the downside. So in truth, if you're going to short right now, I would use low position size, low leverage. Okay. Again, I recommend that pretty much for every scenario, just because when you're unsure, you don't want to risk at all, right? Until you have full-on confirmation, which does happen sometimes, not super frequent in this kind of market, but you want to be carefully or cautiously optimistic, right? So again, to me, when I'm not 100% certain, I'm usually shooting for a 5x leverage trade. If I'm more certain, more confident, 10x, possibly 20, depending on the situation. But I would steer clear of those two, honestly, because unfortunately, you'll see a lot of folks have success with those types of trades when truth is they're getting wrecked and not sharing all their bad trades. Speaking of which, I want to give kudos to one of our community members here for some an awesome situation. I know it sounds terrible to celebrate this, but they were underwater a little bit on one of their long positions for XRP. And they posted that, and I thought that was really super cool because people do not show bad results oftentimes, and it's important to recognize that. And we do hit some losses ourselves too. Again, it totally happens. Try not to overthink it. It's part of the business and the trade, right? That's literally what it is. But for the most part, if we're the situation we're in right now with Bitcoin being kind of on the edge of disaster, I would proceed with caution, set some limit orders, and just kind of wait for a better day. That's my personal opinion. Some alts are actually surging right now. We're taking some healthy profits on some alts, of course. I think we already highlighted that. So I'd focus more so on that, but just generally speaking, not the best trading environment. So I hope you learned something here today, of course, and if you can, help us grow our Discord, Telegram, Twitter, all linked down below. Find your, pick your poison, whichever one you like the best. Discord's the favored one because we can communicate a little bit more effectively, but the others are kind of nice for news updates and technical analysis. I hope you have a good rest of your day. Thanks again so much for your time. We'll see you in the next one. Take care.